everybody. Welcome back into Mining Stock Daily this Wednesday afternoon with some post-market commentary here. Now that we're doing video, I conned David Erfle into actually putting on a buttoned-up shirt, but I also joined him. Typically,
how'd you know I put this shirt on for this interview?
Because I've known you too long, my friend. But I appreciate you coming on, and thanks for doing this with the video. I think it is really important. We got a number of things to talk about. Dude, I don't want to I'm really sick and tired of talking about negative sentiment in this sector. I really am tired of it. It's been a challenging time creating a podcast and platform about junior mining when so many things it's just absolutely miserable out there. But I got to admit today, and it's nice to do this at the end of the market. Despite precious metals being down, I do see some encouragement here in just one day of trading. I'll take it as a grain of salt. However, gold climbed its way up after dropping $20, so it's still above 1940. That's a good sign. Silver is touching its 200-day moving average. The GDX bounced close enough to its 200-day moving average for me to be, well, that's a good sign. So is it wrong to take one day of trading in an abysmal market and be like, well, this is what you'd want to happen if it's going to be this bad?
Yeah. It's good to be hopeful. You have reasons to be hopeful. But as far as stocks are concerned, a big reason why we're seeing some strong bounces in a lot of these juniors is the Van Eck rebalance is finished. And that took place last week, unbeknownst to most everybody in this sector. It's not something that they widely publicize, but if you're an owner and an accumulator of high quality juniors, and if you're just an owner and not an accumulator, you were frustrated. But if you're an owner and an accumulator, you took it as a great opportunity to get a lot of these high quality companies really cheap, because what Van Eck has done, it's kind of a good news, bad news situation. It's the last time they did a rebalance like this was at the end of December of last year. And that was, at the end of tax loss season. And a lot of juniors were affected positively. We had huge jumps in several juniors, large white candles in several juniors. And, but this time it was a big negative. As what I'm getting at is basically the good news. The good news is that they've telegraphed their intentions from now on of what they're planning to do with these rebalances. So basically what it is they're going to review each semi-annual quarter. They're going to review the portfolio a month before heading into the quarter end of second quarter in June. And then they'll do the rebalance in June, and then they'll do the same thing in December. So every year it's going to be the same. But their different rules are basically these juniors are going to be becoming considerably less junior again. I don't know if you recall, I wrote an article on this subject several years ago, about how GDXJ and SILJ, the Van Eck juniors, are not really junior ETFs. They're basically major minor and mid-tier minor ETFs. They should change the J to an M. So basically what they're doing now is they're allocated, what they did last week was they allocated a lot of the funds that they had in these smaller juniors into the top 5, which are mid-tiers and majors. Mm-hmm. So they have a standing 7% in their top-ish name, and then it goes down 6.5%, 6.6%, 5.5%, 5% to the 5th name. And they'll rebalance it semi-quarterly on that basis. So it's kind of confusing. So if you want to give out my website, my email address, your listeners can contact me, and I'll send them the information that I sent to my subscribers on this that explains it better than I can. So basically, it's a good thing now that we know what the rules are, they're not going to change anymore. But the bad thing is, these juniors got hit hard again. But if you're accumulating like I am and like my subscribers are, it's a good thing because these high quality juniors just got cheaper, and we saw strong bounces in many of them this week. That's why our portfolios really didn't get hit the last few days. Portfolios that are heavily in juniors, heavily in high quality juniors that are holdings of SILJ and GDXJ. So we had strong bounces this week in several of them, and basically my portfolio is up on the week because of it. And there was also a few juniors that got hit with a double whammy because they're included in both. So if you got a junior that's included in both the SILJ and the GDXJ, your junior was hit pretty hard.
Yeah. So did this affect the GDX or just GDXJ?
It's just GDXJ to my knowledge. There may be a rebalancing for GDX and SIL down the road that I'm not aware of. I will do some digging and try to find out. But
sure.
That's always a possibility that they could rebalance GDX and SIL next week, which is the last week of the quarter.
They certainly could, but at least we have some clarity in the quote-unquote junior ETFs here. I wonder, Dave, can we talk about a few specifics? Who are what specific companies were winners through this process?
Well, the winners were the top 5 because if they were less than those weightings that I mentioned, then they had some buying come into them. On your sliver of hope theme, there's another hopeful occurrence that I can mention here that's taken place recently, and that is the action of the world's largest gold miner in Newmont Mining, who's set to become not only remain the world's largest gold miner, but become in a class by itself when the Newcrest merger is finalized. They'll basically be the largest gold miner by ×2 because they'll be producing twice as much gold as the number 2 producer, which is Barrick. But what the stock has been doing recently is it's been showing relative strength to both the gold price and the GDX. If you bring up a ratio chart of the Newmont gold chart in relation to GDX and in relation to the gold price, it's starting to trend upward. And that's a good sign because I think that's a sign of smart generalist money generalists rotating some of that AI money that's those incredibly wild gains that they've made over the past 6 months. I mean, you've had Nvidia is up like 180% this year alone, and it's got a PE ratio I think of something like 220, and Amazon, same thing. It's got a PE ratio of like 300 now, and these Magnificent Seven stocks that are related to AI had these huge gains, and they've become wildly overvalued and extremely overbought technically. So I think some of that money is being rotated into gold stocks now via the world's largest gold stock, Newmont. It's a trend that's just started, so it's something to keep an eye on.
Yeah, there's also news that they were going to forego a capital expenditure, Yanacocha, $300 million that they're gonna kind of put on
right.
pause.
That news
here.
Came afterwards. That news came after this trend began.
Yeah, very interesting. You can look at the chart. I mean, it is only about a week or two long, but there's a higher high and higher low. So let's keep a real close eye on this. But that's what you really want to see, isn't it, Dave? The big gold producers leading the way in front,
because they always do.
Metal. They always do. So
they always do in both directions. They lead the way down and they lead the way up.
I'll take this silver lining. I told you, I'm trying to find some optimism here, and that's it. All right, there we go. Hey, but let's talk about fundamentals of precious metals right now. The Fed came out last week. it was I guess you could say, a timid pause. They announced that they'll probably raise another 50 basis points and 2 quarter basis point increments sometime this year. I guess we'll wait to see when and if that happens. But if we take it for their word, and I got to be honest with you, Dave, like I kind of think that them fighting inflation, I do take it for their word. I do think they have a little bit longer to go, and therefore they'll raise interest rates. I do believe that, but that's not good for gold unless gold investors really starting to look like 6 months down the road here. But that's not exactly what we're seeing. The
Yeah.
fundamentals are not in our favor here.
Well, the macro fundamentals are. They're definitely in gold's favor. I mean, if the Fed coming out last week and paused this hawkish pause that they're calling it, it solidified my expectations that rate cuts are coming. I mean, if we take a look at the Fed's playbook from 2018 and 2020, the last time they ended a rate hike cycle, at the Fed's last rate hike on December 20th in 2018, and the S&P was down about 17% at that time. They planned to hike twice in 2019. That never happened. Not only did it not happen, but they cut 3 times in 2019, with the first cut coming in July. So, and this resulted in a $700 move in the gold price over the next 18 months. So I wouldn't be surprised if they back off again. Of course, that several things have to happen for them to do that. The stock market has to roll over, and the stock market is extreme overbought on a daily basis and on a weekly basis. It appears to be beginning to roll over now. And if you take a look at the 2-year Treasury yield, that's rising towards a very significant number. That significant number is 5%. I think it's about 4.7% right now and rising.
Exactly.
The last time there was 2 times that the 2-year yield curve ran up to 5% and caused major banking issues. The first time was in 2008, and that led into the global financial crisis. And then recently, the 2-year yield ran up to 5% in early March, and that kicked off the regional banking crisis in the United States, which I don't think has ended. We got to watch that number, watch the 5% on the 2-year, because as far as if you're looking for reasons for the gold price to go higher, I mean, you got a combination of the aggressive rate hikes. The Federal Reserve raised 500 basis points in 14 months, which has created tighter lending conditions. You got a stagnant housing market. You've got a commercial real estate market that is teetering on the edge when these lending conditions get tighter, and yield curve inversions timelines are consistent with recessions in the past. A recession is coming. I think everybody's in agreement now a recession is coming. The market is priced in a soft landing recession, but not a hard landing recession.
That 2-year has been the bellwether of almost everything inflationary for the last 2 or 3 years. It's been quite extraordinary. But I've thought a lot about this 2-year, because I mean, that's what I do. But I think, why if somebody's offering me 4.7% on a 2-year risk free, or better yet, 5.2% on a 3-month, or whatever it is, it's over 5 now. I've got to assume that if you are handling really smart money, and in this volatile market time, you are more likely to just put it into those treasury bills, guarantee that yield, and wait this thing through. And I really think part of it is the reason the juniors are not getting a bid. The TSX venture, the liquidity is in the trough. There is no volume in the venture.
Lowest it's because in over 20 years.
I'd assume it's because people who are handling large amounts of smart money are just going to those bills. I mean, is that is that taking a lot of the luster out of this market?
Sure. Yeah. And it's amazing. It's the, money flows to the next bubble in this environment.
Mm-hmm.
It went from the crypto bubble into AI, and it skipped us. it skipped the
Yeah.
it skipped the juniors, and it went right into AI. So yeah, I mean, all this ends for us once the gold price breaks out, as far as I'm concerned. But until it does, they're, these juniors are going to continue to get sold on good news. So
Yeah.
if you're a junior, if you're a small cap or a micro cap junior, and you need money, guess what? If you didn't raise money recently, the window basically just closed for the summer. I think there was one financing last week. So if you failed to raise money and you needed money, I don't care how good your drill results are. I don't care how good the news is that you're going to come out with is. The market knows you need money, and if let's say I'm an investment professional, and that's mostly what's left in this sector now, or professionals that are just trading in and out of these things. I'm looking at news releases of really good companies I want to own, and if I see a drill play that comes out with bonanza grade results, they've made a major discovery, right? But they need money. I'm going to sell the stock, right? And I'm going to wait for the finance to probably get a better price and at least a half warrant, if not a full warrant.
Yeah, absolutely. So, I mean, I know you've been kind of, you haven't been doing a whole lot of financings lately in the last couple of years. It is us U.S. investors; they treat us so well and make it so hard to get
You keep driving us
these,
away from this sector.
yeah, to get those ledgers removed. But I'm just kind of curious, given these valuations. I mean, are you tempted to just bite the bullet and deal with the administrative costs of getting those ledgers removed and jump back into financings?
Not really, because a lot of these companies are trading at perpetual warrant prices already. Why take the risk of getting into something that I can't sell for 4 months? And it's not, well, what am I saying? It's not 4 months. I'm a U.S. investor, so for me, it's 6 months or 5 or 6 months. It's because I got to wait for the legend to be removed. So they've pretty much scared me, and not scared me, but pretty much taken me out of the financing game, because basically, it's been a bear market for a while now in these little juniors, and I'd rather accumulate something in the open market that I don't have a holding period, that there's not a holding period going to be associated with it, and I don't have to worry about legend removal, paying extra fees, because they've been hitting us with these extra fees also. So I mean, you got to put a considerable amount of money into a really high risk junior to get a full warrant at a time in an environment where companies like this aren't getting rewarded for good drill results. So it really doesn't make any sense to me. But that's good news for the smaller retail investor that's listening to this podcast, is they don't have to go into these private placements and get the warrant to get the extra juice, because a lot of these companies are trading with perpetual warrant prices already.
Yeah, and now we have the rules. Certain financings that fit certain criteria are live trading right away. They don't even go into the 4-month hold period, and we've seen a few of
those don't
equities.
offer a warrant usually.
They don't, not usually, but sometimes they do. I have seen them. All right, let's lay the hand. What are you watching here as we progress through? It's it's kind of crazy to think we're in the last couple of weeks of first half of 2023. This year's flying by. But what are you watching here closely? I mean, hopefully a follow through on a bounce off these 200-day moving averages this week.
30 the 30 level on the GDX has been pretty strong support. That's where it bounced today. And that level on the GDXJ is 35. But bad news is there's an open daily gap at 28 on GDX. that's down there saying, "Hey, I'm still here." So that could fill, but I don't think that would fill unless the gold price lost this 1940 to $2,000 congestion area that it's been trading in for the past month or so. It tried to close below it today, but um, Fed Chair Powell's testimony in Congress, being the hawkish pause variety again, was not enough to keep it down there. So if you take a look at open interest in gold, I mean, it's the lowest it's been in 6 years. Gold's about to break out, and nobody cares about gold. And banks are still heavily short here. So, they want to get out of that short position. So they're doing everything they can to get it lower so they can get out of that short position before the breakout. Because if we take a look at, the history of markets, when you have something that's tested a resistance area 3 times over the past 3 years, it always fails on the third try. And then that's the history of markets. It fails on the third try. And then it usually has a strong move down, like a false move, right? The gold price anyway, because the gold market is famous for having these false moves to get everybody out of the pool, right, before it goes in the direction of its intention. It did this back late last year at that 1675 level. Remember when 1675 was the level everybody was looking at? Okay, it loses 1675. You're going to see stop run. You're going to see the gold price go down to 1,500, 1,400. I saw calls of 1,400 happening. What happened? Well, it was a false move, and it was a bear trap. The gold price bottomed at 620. It had a 3-month triple bottom there at 1620, and we saw a $465 move to the upside in 6 months. That's what happens when you have a false breakdown, right? You have a strong move in the opposite direction. False moves create the energy for the price to go in the opposite direction. I think that might be what's going to happen here with the gold price. So I've been saying during this entire correction that I expect to see the $1,880, $1,900 area tested. And I still wouldn't be surprised if that takes place first before we move higher. But we are going to have that strong move. And I think it's coming pretty soon. But the level to watch on a monthly close in a couple of weeks is the $2,000 level. The last month, we came within 90 cents of closing above 2,000 on a monthly basis. Okay. So if we get a monthly close above 2,000, I think there's a really good chance that we get that breakout in mid-July above 2,100. And we need a monthly close above 2,100 to signify a technical breakout.
Something fundamental is going to happen to make that
Right.
move.
Right.
There's going to have to be some clarity that hikes are over and this pause isn't hawkish. It's actually a pause, like a real pause.
Right.
In my opinion.
Right. I agree with that. But there's something that people aren't really talking that much about. I know mainstream media hasn't really reported on it much. And that is the NATO starting these war games last Monday. I think it's called, I forget what it's called, but it's 10,000 troops, like 250 planes. They're doing these war games in Germany. And so I certainly hope that this catalyst for the breakout is not geopolitical with war ramping up, with the war in Europe, heating up again. I certainly hope that's not the catalyst, but it very well could be, because everybody's concentrating on the Fed and what the Fed's going to do. Nobody's really thinking about what's going on over there in Europe, which is atrocious. So I certainly hope that's not the catalyst, but it could very well be. Wars have been strong catalysts for gold in the past. If you take a look at the huge bull market that we had after Nixon took us off the gold standard in 1971, we had the gold price move from $100 in 1975 to about the 400, 450 area into late 1979, while the Fed was raising rates, while stagflation, because the Fed had lost control of inflation. It created this stagflationary recession. It was really bad. But what took the gold price from 400 to 850 was Russia moving into Afghanistan. That was the catalyst that triggered the parabolic blow off in that gold bull market. So I certainly hope this is not the catalyst, because nobody wants to see more war in Europe or anywhere for that matter. So, but I think it could very well be the catalyst to break us out at some point in mid or late July.
Let's tackle that if it does come into fruition, and we have to decide what to do from there, Dave, because I know how those things end in the gold price. And once things calm down, gold comes, falling right back down to earth. Dave, appreciate your time. Good to connect with you once in a while. You look great, buddy.
Oh, thanks,
man. Before we let you go, you didn't mention the write-up on these rebalancing. Let people know if they want, maybe follow up with you and maybe get a copy of what you written.
Oh, sure. Absolutely.
Email
absolutely. You. Yeah. You can send me an email at oroyplata43@yahoo.com, or you could just go to my website at juniorminerjunky.com, and you can send me a note via my website.
All right. Thanks, Dave. Have a great rest of your week, my friend.
You too, Trevor. Always great talking to you. Thanks.